Though things took a turn on Friday, the markets broadly survived last week's data gauntlet. Investors distracted by a G7 pledge to do what it takes to support the global economy, the Fed's latest kitchen sink assault, and a $2 trillion stimulus package from the US government. That allowed the Dow Jones, which had started last week by plunging under 18,200, to at one point come close to 22,700, before closing out Friday at 21,550. It is unclear this time out, however, whether there will be such fiscal and monetary policy measures to divert the market's attentions from some cold, hard numbers. Not to mention the fact that the USA is now the country with the highest concentration of coronavirus cases, with the figure approaching 143,000. Things properly get underway on Tuesday with the release of the Chinese manufacturing and services PMIs. Given that the situation slightly shifted in the country between February and March, it will be interesting to see where the latter's PMIs stand in comparison to the 35.7 and 29.6 readings posted in the former. Analysts are expecting the manufacturing sector to rise to 44.9, with services bouncing back to 42.1. Tuesday also sees the US consumer confidence number forecast to fall from 130.7 to 115.1. Moving on to Wednesday, and the Caixin manufacturing PMI from China is joined by the final market and ISM manufacturing readings from the US. The flash market number came in at a better than forecast 49.2, though the final reading could fall from that level once the last week of March is factored in. There's also the ADP non-farm employment change reading, set to swing from 183,000 to minus 125,000 in the week's first taste of jobs data. Thursday's economic calendar, likely every week from now into the foreseeable future, is built around the latest unemployment claims reading. Last Thursday's figure revealed 3.283 million new jobless claims for the weekend in the 21st of March, blowing October 1982's previous record high of 695,000 out of the water. Investors will want to see whether that was a one-week spike as businesses dealt with the brakes being put on the economy, or whether the following 7 days saw millions more apply for unemployment. Then, on Friday, we get to the biggie. Alongside the final market and ISM services PMIs comes the first non-farm jobs report covering the coronavirus crisis. And if the unemployment claims data is anything to go by, it could be one for the history books. Forecasts, however, remain relatively measured. The unemployment rate is expected to rise from 3.5% to 3.8%, with wage growth down from 0.3% to 0.2%. The non-farm number itself, meanwhile, is estimated to fall to minus 81,000 from 273,000 in February. That forecast could perhaps be taken with a pinch of salt, however, given that the unemployment claims forecasts ahead of that 3.283 million person reading range between 1 million and 4 million. So there is likely a large room for error on Friday with that headline non-farm number as well, especially given even in the sort of the best of times, those non-farm forecasts can be somewhat inaccurate once you look at sort of a run of the final figures. What makes previewing the week tricky, as mentioned, is the fact that we don't know whether we're going to get any more monetary policy or fiscal stimulus from the US government. You know, it wouldn't be a surprise if any arrived. It sort of has been arriving at a fairly steady clip week on week. However, when it's going to come and in what form it's going to come is unclear, meaning it makes it hard to see how cushioned the markets will be from what is likely going to be another pretty tough week for US figures.